Welcome to another episode of Rich Dad StockCast. If you're serious about enhancing your financial education, you are in the right place. I'm your host, Denney, and today's topic is one that every investor needs to hear, so pay close attention. Investment red flags, how to spot and avoid bad deals. Now, before we dive in, please remember to like, subscribe, and leave a comment below. Your feedback helps us to bring you more of the content that you want to hear. And don't forget to visit StockCastBonus.com for free access to valuable educational resources to boost your financial knowledge. Now, joining us today is Rich Dad expert Andy Tanner. Andy, welcome back to the show.
This is a great topic, Del. Thanks for having me. I love the energy you bring. And in this world, man, there are so many people that are untoward and they do things the wrong way. And I feel really angry towards them, especially when they attack seniors. And there's all kinds of opportunities. How do you know what a really nice opportunity is from a scam? Great skill to have. I do actually have a few tips that I can share. So this will be a very valuable episode for this day and age for sure.
Yeah, I mean, let's jump in. You know, there's a lot of red flags out there. The more seasoned you are, the more that you're able to spot these red flags. But those that are new may not be able to spot those with experience. So let's just jump into it. What are some of the common red flags that you see?
Well, I think you start with context always. The context in which a deal is presented is a big deal. This is a nice opportunity to spout off a little bit. For example, you're going to get people that are untoward, that scam, that lie and cheat and steal every day of your life. I'm sure that I'm not alone when I, see my phone ring, that it's just scam likely, it'll say sometimes, yeah. Or you'll get an email from somebody that says you've won something or this or that. And I've had heartbreaking stories of this. I'm going to give you a couple of cautionary tales. I had a lady write to my customer service at the Cashflow Academy, having never attended the Cashflow Academy. She was not a student. She had not applied. She had not been admitted. She was not a student. But she wrote, and it was such a heartbreaking thing that my customer service department, the supervisor, Cheryl, she sent it off to me. Says, Andy, she kind of knows. She goes, you're the type of guy that want to see this. And this lady had left her number. She lived in Canada, and it was so heartbreaking that I thought, I'm just going to call her. And, we'll call her Miss Jones. And I said, Miss Jones, this is Andy. You wrote my company for some help. She had gotten in a Bitcoin scam, under the guise of them, having this great Bitcoin idea in the UK. And she said, I've given them, basically my life savings, and they've said that there's been that I've been flagged in the blockchain. I've been flagged in the blockchain that I need to send a certain amount of funds to fix it, unflag it, and everything be okay. And these scammers, over a period of about 4 or 5 months, cleaned out our savings. They actually are now go to our bank to apply for additional loans to get unflagged from the blockchain. And I asked her, I go, do you have someone, daughter? She was a little older. I says, do you have a daughter or a son or, someone close to you could be with you right now? She goes, yes. Her daughter comes. And I said, I'm afraid that, you've been taken, you've been scammed. And these people don't exist in the UK. They're probably, somewhere else, in a strange part of the world, and they're hiding from me. And she goes, well, how do I get my money back? And it was heartbreaking to tell this woman that it wouldn't happen. So I guess the thing is, this is going to happen every day, and it could happen to anybody. If you look in the comments, for example, of this very podcast, you'll find people that'll try to do that. And part of me wants to moderate it and say, hey, let's just, anytime we find something like that, let's shut it down. The other part of me wants people to learn and recognize it. You got to learn how to see that stuff. I remember one time I was at a conference, and the guy was teaching something. He did have a service to sell at the conference, and I was kind of interested in it. And at the break, I went to the men's room to freshen up, and I'm standing there in the men's room, and guy comes next to me, starts to pitch me an alternative to what the guy at the event was pitching me. And I just looked at him. I says, "Do you realize you're pitching me in a bathroom right now? That's context." I said, if you have something better than what he's offering, why haven't you marketed? And why haven't you advertised? And why don't you have a 20-year track record? And why don't you have a brand that's trusted? You're pitching me in the bathroom. And I almost want to say that when I see people in the comments, saying, "Oh, so-and-so helped me." And, "Well, who's so-and-so? And why aren't they in their own podcast with their own brand, with the 20-year track record and students in 172 countries," right? So I kind of muse at that a little bit and smile. And I go back and forth. I would hate someone to lose their life savings to a scammer if they're old or elderly, but if they're younger and they lose some, well, maybe they learned something from that. Maybe they just learned a little lesson they need to learn. So the first is context. If someone's pitching me in the bathroom, or someone's pitching me in comments tailing off another popular podcast, you can almost assure they're in an offshore. They're not telling you who they really are. And, there's so much AI now that your ability to discern what reality is from what is not reality, the AI will now be programmed to where it'll hit your primal instincts. It'll fake you out. It'll be smarter than we are. And I think the way to handle that is to ask this question: what's the context? Who's it coming from? Is it a rhetorical context? Is it a veridical context? How do you know what the truth is if you don't look at the context? So that'd be the first one. The second thing is learn. If you get into, that's just when someone's pitching you in the restroom. That guy's no good, right? That's just a bad context. The second way to spot a good deal from a bad one is, in the cash flow game, is such a great game. In the cash flow game, the person on your side is the auditor. And so what happens is, whatever numbers you fill out are audited by a third party, by someone that is hands off in terms of special interest or conflict of interest, right? It's just, hey, I'm the auditor. And so having audited financial statements is a really, really great way, because you really can't hide much. If the financial statement is not audited, then they can lie on it, right? But if it's an audited financial statement, boy, you can spot trouble in that. Oh, Kenny, you talk about context. I love Kenny Macro and Kim Kiyosaki. They used to bust us up laughing, and it kind of became not really a slogan, but a saying, I guess, amongst us. They say, the bigger the brochure, the worse the deal. Right? Because if it's a bunch of baloney, it's got to have lipstick on it. It's got to have time and stories to tell and everything. But the best deals have small perspectives, small PPMs, small brochures, and they simply show the financials that are audited. And if you understand financial statements and those 6 numbers of income, expenses, your net income or your cash flow, asset, liability, and equity, it's tough to hide shrinking, and tough to hide debts that's unwise, and tough to hide that stuff. So I recommend the cash flow game for that reason. Is it shows you how to. It's really hard to disguise a bad deal. Not to say it couldn't happen, but if you understand how financial statements operate, that's universal. Every language, every culture, every entity, whether it's the Red Cross to a hospital, to a school, to a church, to a business, have a financial statement. And I'd say that, to me, is one of the number one ways to know the difference between a scam and a real opportunity, is the audited financial statement.
I love that. Now, let's take it generational speaking. I want to do this for the listeners where, we're getting up there in age a little bit. We have a little more experience under our belt.
Well, I'll tell you what.
But thinking about, people that are in their 20s that are starting out, what's the red flags that people should be aware of?
Too good to be true. Too good to be true. Things that, human nature doesn't change. Everyone has greed glands, and everyone has fear glands, and everyone has anger glands. And if you're feeling anger, greed, or fear, any of those, you're probably going to make a bad decision. If you're emotionally attracted to something that sounds good to be true, well, that's when you start to check the context and you start to check the financial statement, as I said. So if you're young And be careful of something for nothing. I don't know. There's other investors that might disagree with me on this. There might be other Rich Dad experts that disagree on this. Robert and Kim might disagree with me on this. I don't know, but I really love the term earnings. I love that term. You know, I love NOI, net operating income in real estate. What does that mean? Well, net operating income means there's things happening. It's called an operation. You know, if you were to go to Atlanta, where the Coca-Cola company has, you know, a large presence, and you walked in one of those factories, you say, man, this is quite an operation you got going on here. You know, someone might come to my little business and say, wow, this is quite an operation you got. There's work being done. There's value been given. And there's a generalized principle that says the more people that I serve, the more effective I become. So one of the reasons I stay away from so many different opportunities that might have made me some money is I'm going to ask this question: who are we serving? What is the mission? And if people lose sight of the mission, you're in trouble. You got to be laser locked in on how you're serving people, because the more people you serve, the more effective you become. Well, if you build 300 million iPads and you serve 300 million people with an iPad, you're going to get rich whether you like it or not. There's so much value being sent out there. So one of the really important ideas is be careful of you know, those Garden of Eden type of situations where the work is evil. If you read the Bible, the first punishment, that I'm not a biblical scholar, let's not pretend I am, but to my knowledge, or at least my experience, the first penalty was work. You know, you ate this apple and I told you not to eat this apple, so out of the garden you go. And instead of having a life where we'd give you something for nothing, now by the sweat of your brow you'll earn your bread. So you're going to serve somebody, you're going to do some work, you're going to get some stuff done as an entrepreneur. So if there's no one being served and it's just this free money, you know, you put a little money in, you're supposed to get a lot out, and no one got served in the process, you've been scammed. And even if the person doesn't get arrested, it's still a scam to earn money. The late Charlie Munger said, if all you do is get rich by buying, you know, little pieces of paper, it's a failed life. There's so much more to it. Life, you know, so much more to it than just being shrewd in wealth accumulation. We want to serve people. So if you're young and you see a deal to get rich quick and easy without serving anybody, that's an unfortunate opportunity. And whether it's legal or not, I don't know if I'd be excited about it.
All right. I've got some more scenarios I want to ask you, but let's do this. Let's take a short break, but listeners, don't go anywhere. You know, we've covered a few red flags so far. We're going to get into some more as well. What to be aware of, right? So when we come back, Andy will share some actionable steps that you can take to protect your portfolio and avoid those pitfalls that are out there. Stay tuned.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning, as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad StockCast. Now that we understand some of the key warning signs, some of the red flags, I want to kind of present in another light, Andy. You know, we talked about someone that's starting out, you know, in their 20s, but let's say someone that is a little more seasoned. They're in their 30s now. They've got their 401k. They're ready to get started in really trading in the stock market. They're ready to start investing. What are some red flags that someone in that scenario might need to know about?
Well, if they're in a 401k, that's a red flag right there, because that's the scariest scam of all, because it's legal. And there are a scam doesn't need to be illegal necessarily. I mean, it depends on your definition of scam, but if you mean you're getting taken advantage of, if you mean you're being traded unfairly, there's a lot of people that find operations within the law that can treat people unfairly, for sure. For example, here's an example of a legal scam. I think Las Vegas and a casino is a legal scam. They're not breaking the law, and they're providing entertainment, I suppose. But I think people get scammed in that. Of course, that's in the eye of the beholder. Maybe some people love they're paying for the adrenaline, right? The entertainment of it. But if a person's in a 401k, man, just well hand your money to Wall Street, because the drag on that with fees is crazy. And that's because they don't understand the financial statement. Whether it's a person in the 20s, 30s, 40s, 50s, I think it's the same, Dell. You know, a deal doesn't become a scam to a 20-year-old where it'd be good for a 30-year-old, right? They're either workable investments and opportunities or not. So as people get, as people get more seasoned, more savvy, I think the only thing that changes is the game changes in the size of game you can play. I certainly play a larger game at my age than I did when I was 20, for sure. The game gets bigger. You know, a guy like Robert, man, he plays big games, huge games. And so I think the size of the game gets bigger, but I think the principles are the same. The context, I think also the people involved. You look at guys like Bernie Madoff, who had a heck of a reputation. I mean, the guy was, had some big positions in the securities industry, so there's a lot of trust. So even then, if it sounds too good to be true, and trust but verify. One of the tells on Bernie Madoff's that was his downfall is it was just simply not mathematically, statistically likely to do as well as he did, constantly, without any pullbacks. I mean, Buffett says if you don't have a year where you've lost half your money, you're probably not, suited for this. If you can't handle that, you're not suited for it. So I think the things are the same. Now we've talked a lot about scam.
Mm-hmm.
If you're 30, what does a good opportunity look like? Well, there's a great guide to this called the BI triangle that Robert came up with, the business investor triangle, and it has 3 things on the outside and several aspects on the inside. On the outside of that, how do you spot a good one? Well, number one, what's the mission? Is there a mission here? Is it just, we're here to make money? I remember I mentioned this in podcast previous, some people approached Robert and Kim and they said, hey, we can make a lot of money. You got a big following. Let's do this ETF. People would buy it. Yeah, but where's the value? They saw a whole bunch of people and a really trusted brand and said, we'll just do this ETF and you'll buy it. That's not right. They weren't helping anybody. So, they ran from that opportunity and said, no, that's not it. So, yeah, I think if you have that mission there, that's important. Leadership, who is in charge? Who's the leader of this team? The team itself, who's on the team, right? And then you have an idea that you got to have cash flow. You've got to have cash flow as a foundation or there's no business. If the opportunity doesn't cash flow, that's big. And, there's other things. There's systems and legal and, there's the product and all that stuff. But to recognize a good deal, it should cash flow. Let's talk about that for a minute. In the 90s, there were a lot of really bad deals that never cash flowed. It was all talk. It was a story, .com stories. And it went very much to how some of the AI stuff goes today. They say, well, we've raised so much money. Well, raising money can happen off a story. Earning money happens off sales. That's a big difference. So if someone's bragging about how much money they've raised, there's a sheep mentality. I saw that in the 90s so much. I can give you specific examples. But people say, yeah, we've raised, $30 million. And so you invest in us as well. And someone says, gee, if you've raised that much money, it must be good. It's people smarter than me put their money in there. I guess it must be good. No, it's easy to raise money. It's hard to earn it. So you raise money through, making promises and telling a story. You earn money by delivering value to a real customer. So, maybe you say, hey, maybe the story's true. Well, maybe it is, but the risk goes up if there's no earnings. Second, I mentioned leadership and the team. Things they've done in the past at other companies aren't the same as things they're doing at this one. So in the 90s, you'd hear, oh, we got this serial entrepreneur. He's a serial entrepreneur. Oh, they did this and this and this. Yeah, but what have they done here? So when people brag about the money they've raised rather than the money they've earned and the people they've hired that have a resume over here but not here, that's some real signs of what a good deal and a bad deal is. After a while, you get a guy like, I really look up to Kenny McElroy a lot. I've learned so much from him. And, he has always had integrity. And isn't that he hasn't lost investors' money? I'm sure he has, before. Very rare, though. and the integrity in which he deals with, and the results in which he delivers, develops a reputation where there's a lot of people he can just simply say, I have a deal, and boom, there it comes. So who is involved is really important. The financial statement's really important, and that's how you tell a good deal from a bad deal, no matter how old you are.
How do you, as you're looking into an opportunity, I've seen the mindsets go a few different ways where, it's easy for entrepreneurs and investors to be very optimistic and, see that the glass is half full, and you can get in trouble that way. I've seen other investors try to prove everything wrong before they get into it. What do you think is the good approach there?
Well, there's no guarantees in investing. I mean, that's one of the problems I see people have. They can't, I had a student once that I had to be a little parental with, that he'd been with us for several months. And I ran into him at an event, and I said, hey, how's your investing going? He says, oh man, it's awesome. I'm up, $100,000 or whatever it was. I said, oh, that's great. And he said, well, in my paper account. And I said, you haven't pulled the trigger yet? And what a lot of people wait for is they'll wait for a feeling of being sure, the sureness or this assurance that they're looking for, that they're not going to lose. And that has not very little to do with scam and an opportunity, because you can have a real opportunity that's a legitimate business, that things can just change and things can go from good to bad. It isn't like we would be unwise to frame this conversation in such a way that if it didn't go well, it was a scam. There's a lot of great businesses that have failed. I've had 2 businesses fail. They weren't scams. They just didn't work. There's a big difference there. So once you find an opportunity, you want to understand that 4th pillar of risk management, because it's easier to get into an opportunity if you know how you're going to get out of it. If I buy a stock, I already have a plan under what fundamentals I might sell it, or what might change my mind. Buffett, when he pulls out, he has exit criteria. And so knowing how to protect money, and how to insure money, and how to hedge, and how to manage risk actually gives us a better confidence to seize opportunity. Things like position sizing is a huge thing. I might have an opportunity like a syndication, where a lot of those are as little as $100,000 up to, $3, $4, $5 million you could put in. Keep your position size a little smaller and don't have as much exposure to something like that. Have an exit strategy in your stocks. If you have risk management, even if you get in a good deal and it turns to a bad one, you'll be hurt less than if you don't have risk management. So that's a really important part of seeing a good deal, is also seeing the risk management, because good deals can turn, they can go bad. There's great American companies that have failed, that were great companies, and they just couldn't make it.
Have you seen it in your own investing where you're like, I really want to get in this investment, but you saw that red flag and you did the deal or didn't do the deal? And then what happened? Can you name any experiences?
I don't think I've ever been scammed, other than one time where we had a really bad partner. It wasn't the most money in the world. It was $60,000 mistake. And we invested in this small little venture, and the guys basically took the money and ran. And that's many, many years ago. But so I guess, did I get scammed? I don't know. Maybe I kind of blame myself more than them for being stupid and not taking my criteria. But there's been a lot of stocks that I've thought.
But going back to that, what would you say the red flags you overlooked in that scenario?
Lack of due diligence, lack of contract, a little bit too much trust in other partners that also put in. We had a bunch of guys that put in the same amount of money. So I thought, oh, these guys are putting it in, I'll put it in. Lack of experience. Yeah, stuff like that. I mean, it was, just mistake.
Just a $60,000 education lesson. That's all it
Just
was.
kind of a little class I put on for myself from the School of Hard Knocks and some of my buddies that we got into it with. I mean, you know, when I read, the most money I ever lost was when I read the cash flow quadrant. That's when I started getting all these. I was a young investor, hadn't met Robert yet, and I just wanted cash flow so bad that anything that even resembled that it might have been an asset, I just threw money at it with reckless abandon. I didn't have an appreciation for, you know, it's not just deciding not to buy doodads and to buy assets, right? And I wanted to go into business, so I would just go full bore. And you know what? Do I regret that? Not really. I learned so much. And everyone has a time in their life where you're a young, stupid kid, you know, and you're in your 20s or whatever you were, and you did stupid things. And but it was in an effort to better my family's future and an effort to get more freedom. And you know, if you don't think those are great lessons, some people couldn't stomach that. They say, "Oh, I'd never do it again," but not me. I just keep going. Maybe I'm just too stupid to stop.
No,
but I have learned a lot along the way for sure. And there's stocks that you'll see as you learn more about fundamental analysis beyond the scope of this podcast, because I don't get wonky and I don't want to go small picture. I want to keep it big picture. But as you learn how to read a financial statement, and particularly a statement of cash flow, and you see where they're putting money, and you know whether they have a moat or not is a big one. And I'll still be susceptible to mistakes. Buffett in his 80s, you know, I made a mistake when I bought this, and I made him. He still makes mistakes. You don't become mistake-free your whole life. You just make fewer of them and less devastating ones, I think.
Yeah, I think so. He knew how to hedge himself, and he had the education. And speaking of education, you know, you've got wonderful boys. They've got a good head on their shoulders. You know, so far, so good, right?
Better than their dad.
Yeah. What's with education wise? What are some red flags that you've pointed out to them about their education? What to look for, what to look out for, beware of. What's your thoughts on that?
Well, I don't know that I've given them as many red flags as maybe tools. I mean, the red flags that I've talked about so far are the same ones I've give them. You know, if it sounds too good to be true, you better investigate the context. If someone, you know, if they're pitching you in the men's room, they're probably not legit, you know, stuff like that. If they don't have an audited financial statement, if they're only talking about potential of the future and not about what they've been able to do so far. I mean, all those are red flags. But I also tell them to find what Warren Buffett will say, you know, you have a circle of competence, and Buffett is got a wide circle of competence, but there's still things that I don't invest in simply because I don't understand them. Robert is invested in a lot of sophisticated things that I have opted not to invest in because he's just further along than me, and he just understands them better. You know, really, really sophisticated stuff. And so I just tell my son, stay within what your circle of competence is. You can grow your circle of competence, but don't invest until that circle's been stretched. And you know, they've done okay. Even as investors at a young age, I'm proud of the investment decisions they've made in stocks, even though they're teenagers.
I love that they started so early. You know, you think about getting your 10,000 hours in, like they started the clock early, which is great.
Yeah, and that's the other thing that's nice about publicly traded. There's scams, certainly, like, you know, Enron was a scam, and you know, there's things that go on with some stocks that surround the stock that would resemble a scam. But you know what? Apple's not a scam. You know, I have good products, and you know, I have a phone, it works. I didn't get taken. So if you're really afraid of getting scammed, you know, the SEC is a pretty good watchdog. They're not perfect, but if you're going to buy, you know, a large cap stock, better chances than not that they're not in, you know, they're not some company that is in an apparition that doesn't exist. They probably have a real plant. They probably have real workers and real IP and real stuff. And they have real profits and real dividends that they pay most of the time. Yes, you'll get an Enron once in a while, but they're not out to, you know, to scam people. There's some CEOs that do some weird stuff. I'm not going to say it's squeaky clean, but I know a lot of people in every asset class that have just been taken because they shook someone's hand and they didn't have oversight and SEC and FTC. And I know people have lost millions of dollars, basically on a handshake or small contract deals. That doesn't happen as much in the equities market. So not totally safe, but maybe a little more confidence if you're new. So if you're young and you want to learn about that stuff and read financial statements, start with the stock and pick one you like and see how McDonald's runs their company, and see how Walmart and Costco run their companies, and pick stuff like that and start learning.
I love it. I love it. Well, Andy, we're over on time. Thank you so much. Yeah. That's a wrap for this episode of Rich Dad StockCast. Listeners, we hope that you found our discussion on investment red flags insightful and helpful. And as always, a big thank you to Andy Tanner for sharing his expertise with us. Now, remember, whether you're just starting out or well into your investment journey, staying informed, staying vigilant is crucial. And for more resources, we're always looking for more resources. Don't forget to visit stockcastbonus.com to help you on your financial journey. Now, if you've enjoyed today's episode, like me, subscribe, leave a comment. Your feedback always helps us to improve and deliver more of the content you want to hear. None of those scammy comments, please. Make sure you leave a good one. And don't forget to share this episode with your friends and your family members. It might just help them be a little bit smarter too. Thanks for tuning in to Rich Dad StockCast. Until next time, get smart, get invested, and take control of your financial future. I'm Denney. We'll see you on the next episode.
This podcast is a presentation of Rich Dad Media Network.